stuff, the markets are going to go crazy. I mean, you're going to see equities shoot higher. You're going to see yields tank lower. And
okay, we're just doing a little commentary on Bloomberg right now.
For your scenario?
Right now, these people are trying to figure out, oh geez, why would the Fed do all this? God, okay, shut up. We already know we're in a global recession. Okay, so basically you got these people on Bloomberg going back and forth trying to figure out, oh, why did the Fed not act sooner? Why did they say inflation was just going to be transitory? Oh, blah, blah, blah. All this. They're going back and forth like, oh my God, base point, rate hike. What are we going to do? Blah, blah, blah. Okay. They are still in the version of reality where the Federal Reserve is not a criminal organization, okay? On this channel, we have swallowed that red pill and we have accepted that the government is doing a controlled demolition of the financial markets, okay? We're in the Great Reset. So we're not going to debate whether or not the Fed did the right policy, this or that, blah, 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 okay? Here on this channel, I'm already in the we're already in the reset framework, okay? This was all done on purpose. Now let's see what she's saying.
Justified for that reason.
Right.
The Fed is not a national security institution.
Right. No, fair enough. It's going to be really interesting. Claudia, we really appreciate it. Claudia Sahm, founder of Sahm Consulting and former Fed economist. We very much appreciate your time today. And tune in to Bloomberg TV at 1:30 p.m. in New York. We will have full coverage for you of the Fed's decision and Powell's.
Okay, well, look, we already know what the Fed is going to do. 75 basis points, guys. 75 basis points, all right? It's already happening. And they're going to have to keep raising rates until the terminal rate gets above inflation. Inflation is at like above 8%. So that means rates well up into 5, 6, 7, depending on where inflation is for the month of October, which we should get that calculation pretty quickly. But this is a controlled demolition of the financial markets via the weaponization of the dollar, okay? So when you raise interest rates this high, it creates a very, very strong demand for the dollar, okay? And that weakens all of the other currencies across the globe. All right, so you have the dollar. This is DXY. This is dollar currency index, just ripping up higher and higher. Now, it's taking a little break right now, but I think it'll probably do this, and then the rate hike will probably hit, and then we'll probably see it come back up here and go even stronger, and the demand for dollars will be even stronger and stronger. So here, what did I want to show you as well? So we got inflation, right? So the Fed is going to have to keep raising rates until they get inflation back down here. Okay, where that's a huge difference. That's a 50% drop in inflation. You think they can achieve that by 75 basis point hike? And for some reason, Bloomberg's debating whether or not they're going to do it. Look, we already know what's going to happen. Okay, or there's no debate on this channel. Like, yes, it hasn't happened in physical reality yet, but we already know what's going to happen, or at least I do. What else did I want to show you? Okay, yeah, so the Dow. This is just a little bot called the average true range. And this gives you buy and sell alerts. And you can see the Dow already started, it basically triggered my sell alert on the hourly already. And this is before the FOMC meeting. This is before the rate hike. My sell alert triggered on Monday. Now it could flip back to buy if the market suddenly become bullish. But in reality, we already know that they're hiking. So this is just gonna form. There's your head. There's your shoulder. You probably make another shoulder over here, and then you'll shit your pants on down this way. So what can we do? What can we do since the Federal Reserve is actively destroying our economy and claims to be trying to catch up when the whole time this was just part of their fucking plan to reset the global economy? So what can we do in a structural bear market? Well, if you trade stocks and options, you can buy puts, which are kind of like shorts, or since I don't understand options that well, I mean I do, but I don't want to mess with them. What I do is buy inverse ETFs. So what is an inverse ETF? It basically tracks an indice, except it's negative 1x, excuse me, it's negative 1x leverage on that indice. So right now we have SPXU. This is an inverse S&P 500 ETF. So, oops, can't undo that. Okay, we'll put it back. But anyway, so this is the S&P 500. If you're in my camp, you already know that they're doing the rate point hike, whatever thing. So there's your shoulder, there's your head. Probably have another shoulder over here, a weaker one. Probably be down here-ish, a little more. Anyways, your neckline is right up in here. Okay, so what I'm waiting for is the official, we've done the basis rate point hike, and I'm going to sit here and see what kind of shoulder is formed, and then I'm going to go over to my inverse S&P 500. I'm going to check, oh, looks like I got a buy alert. Now let's move this to the 4 hour because we want to move up in time frame. So we want to catch big trends here. If we're swing trading, we want to ride it to the other end. So forget all this. I'm going to be waiting until I get a buy trigger on the 4 hour. And then that'll be just confirmation that we've changed momentum. And conversely, you could wait for a sell trigger on the S&P itself. But you can see if we start breaching these lines right here, let's see that shoulder I make. So yeah, if price starts dancing around in here and then falls kind of below this nominal area where this blue line is, what it'll do is flip to sell, and then it'll make the blue line will appear on the other side, and then it'll track the channel downwards. Anyways, I just wanted to say, if you're watching Bloomberg, chances are you know you're still stuck in the little you're stuck in their little propaganda game. You're stuck in their little conjecture back and forth about, oh my God, what are we gonna do? Oh, bad economy go down. Why Fed do this? Oh, Fed doesn't act fast enough. Inflation really high. Inflation wasn't transitory. Okay, all of these things are super fucking obvious if you look at the charts. I mean, they'll just tell you the data. They'll tell you what's going to happen before it happens. Like, you can clearly see the S&P's losing momentum. And it started losing momentum on the 25th of October. We're making little higher highs, and now we're starting to get a little lower, starting to form a neckline here. Now, the charts tell you what the news is going to be way before the news even happens. This is why I encourage you to do technical analysis if you want to try and make money during the reset. Because, yeah, I mean, it's as simple as that. I mean, these things trade at technical levels every single time. Let's do the Fibonacci Bollinger Bands, because I think those are pretty good. And we'll try and see if we can understand what's happening here. Yeah, so this is your 200-day. Last time the S&P pumped up, you made a head and shoulders above your 200-day. Shoulder, head, shoulder. There's your neckline right there. This time, you're making a little head and shoulders right underneath it. So, like I said before, I expect to make sort of another weaker shoulder over here, and then you'll start moving back down to these regression lines. Now I'm going off these charts, right? I'm not waiting and watching the propaganda machine to tell me something I already know based on the charts. And I guess that's another sort of aspect and goal of this channel, is to teach you and hopefully share with you some skills that you can use to gain money during the reset, okay? Because it's a controlled demolition, right? Okay, the pandemic, right? fake vaccines, okay, China lockdown. This is a total global restructuring of economics, of power, of policy, yada yada yada. Okay, so it's a very, very slow thus far controlled demolition. It's the same thing the market sniper keeps harping on about. Let's see, let me show you the market sniper. So if you don't follow this guy, he is he's a much better trader than I, with much more experience. He's got his own company about this. But really what I wanted to illustrate is he understands that this is a global, purposeful takedown economic reset. And if you want to understand more about why that is the case, it would do you well to follow his Twitter and take a look at his YouTube videos. Because he is a technical analyst. He reads the charts. He waits for the narrative to form after the fact because he knows how to read the charts. And the charts will tell you what's going on way ahead of time if you understand how to read them. So let's look at the Dow. So it's similar setup. You pump above the 200-day and you make a weak shoulder here. There's your second shoulder. There's your head. Here's your shoulder here. I don't know where the second shoulder would be, maybe down here, maybe a little lower, who knows. But I'll do an update on this just to prove that my theory is right and the charts tell you shit ahead of time. Once you understand how to read the charts, you don't have to wait around for the propaganda machine to spew out its lies. You can just front run it. And that's what I suggest you do during the economic reset, because they're going to take everything from you and you're going to own nothing and you're going to like it, just like Klaus Schwab said. That's their plan. They've made it very clear. Let's see, what else could I update you guys on? So we got Bitcoin. I've been a bit of a bear lately on Bitcoin. Let's go to the 4-hour. Yeah, I mean, you still haven't reached this 200. And if you can get over this 200, that's like the holy grail for Bitcoin. But if you can't do that, this is a short in my mind. Not financial advice, of course. Do your own research. Look at the charts yourself. I really encourage that. Hopefully I'm going to be making some courses soon and some more structured, organized content to teach you how to trade a bear market. Because right now we're in a structural bear market. If you saw my other video on the banking short, the one that was like Sojacks teach you how to short the banking cabal or whatever, we're still waiting for that one to play out. We'll see. You started to form what could be a bottom, because you kind of have started to turn around. See right here, he started to make a bullish fractal outward. Now you're making a very, very small bullish fractal right now. This is just on the daily. Looks better at 4 hours. Let's see at the 1 hour. 1 hour looks even better. This could have been your, maybe, I mean, this is conjecture. Remember, we're speculative here, but we want to try and make money while the economy is being destroyed. So this could be your double bottom here and here. And then your overall bullish fractal is heading back up that way. Now, time will tell. We'll definitely have to come back to this and check. But if we take a look at the funds that are held by this ETF, got Bank of America. Let's turn on that ATR again. Oh, shit. Oh, man, I have to reset all of the settings. Anyways. So we won't use the ATR, sorry. We'll use the, this one's good, EMA. By the way, all these scripts that I'm using are free on TradingView. So go get yourself a TradingView, follow along in the videos, and maybe we can make some money together. So Bank of America. Let's see this. So, okay. This area right here clearly a technical level. This is a place of resistance. Now you've encountered resistance here 1, 2, 3 times, and all 3 of those times you got rejected and went down to the other side right here. Now, so I mean, seems pretty self-explanatory to me. You're probably oversold on your RSI. Let's look at the RSI, Relative Strength Index. Oops, not that one. We don't want that one. RSI. Okay, so you're slightly, you're pretty much in the middle. We don't have any bearing on whether it's overbought or oversold on the hourly. On the daily, we can confidently say that it's overbought, about 9% overbought. So let me show you something with this RSI. RSI, Relative Strength Index. So Bank of America entered this channel back in, let's see, started in, what should we say, April, May. Let's say it entered in May, and it's been oscillating in between these 2 poles of this channel since May. Now, if you're overbought, which means you basically have too much greed. There's too much buying going on to sustain the level. What eventually will happen is your RSI basically tracks the price. I mean, these are all lagging indicators to a degree. But let's take a look at what happened. Last time you hit the top of this channel, your RSI starts to slowly go down from overbought. You travel back up and down till you're a little bit oversold, zoot back up, lose the support of this EMA line, and then you travel to the other end of the channel. And when you did that, you made a shoulder, a head, and this weird looking shoulder over here. Now this time you got a shoulder here, probable head here, and you'll probably make some weird shoulder over this way. So I mean, this could definitely take some time to play out, because if you look here to here, bottom to top, that was 60 days. So it still could be 60 days here where price just, you know, shoots down a little, gets some support, you realize it's a bank and we're in a crisis, and then it goes down and then you visit the other end of this channel again. Now, I don't know if the channel will hold as support again this time, but I digress. Let's see what else. This is Berkshire Hathaway. Okay, so you had this sort of falling wedge here, here and here, but let's see what else I'm seeing. So you have a head here, shoulder, shoulder, and then shoulder, shoulder, big head. So this just demonstrates that we're looking at fractals. We could probably find another head and shoulders in here if we wanted to. We'll go to that hour. Oh, that didn't turn out well. Yeah, so you could even say head, shoulder, shoulder. I mean, you can break it down all sorts of ways because you're looking at fractals. They're self-similar patterns that sort of repeat themselves. So yeah, this marginally lower low than last time the Dow pumped up. So now you have this going on. Let's get rid of this one. And it's a little bit looking like Bank of America too. You've sort of been ranging since May, and every time you get overextended above this EMA line, you dump back down. Let's see, JP Morgan and Chase, our favorite friends of the worldwide banking cabal. So you popped out of this channel which is good news. Wait, is it Jamie Dimon that's JP Morgan and Chase? Let me know in the comments if anyone even watches these yet. So, to me, you're probably going to do something like this, and you're getting tired here, and you got this sort of downward funnel of a channel type thing, and you're going this way. Oops, where did they get rid of the undo button on TradingView? What the fuck? There used to be an undo button like right here. Oh, they moved it over here. Okay, so yeah, I think this will probably come up. And then you'll have shoulder, head, shoulder. So these patterns just repeat themselves in different ways. This is Visa. I mean, this one's pretty clear. I think you can see what's going on. You're just oscillating between these two lines. Take a look at your RSI, overbought. I expect a reversion down to here. Maybe the guys who track fundamentals will say, oh my god, the dividends were bad. That's why it went down. But if you just look at the liney chart, you'll see that it's overbought. And again, why am I showing you all these banks? This ETF, Financial Bear 3X shares. Let's go to this so I can show you FAZ. Because we can sit and watch news clips about the propaganda, or we can try and make money off of these assholes. So Berkshire, JP Morgan, Bank of America, S&P, Wells Fargo, Goldman Sachs, whatever, Schwab, Citigroup, BlackRock. Banks, blah, 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 blah. I am betting that since all of these are overbought, sorry, not this one, Bank of America, Berkshire, JP Morgan, Visa, Goldman, BlackRock, Fifth Third, just even weaker, almost not even overbought. Same thing with Morgan Stanley, just even weaker. These are even weaker. American Express, UBS. All right, so that one's not on the list. But what we're simply doing here is taking a look at which companies the ETF is broken down with. This is top 10 holdings. There's probably more. But, you know, we're taking a look at the top 10 in terms of percentage-wise that are in this fund. And if let's think about this. Let's invert this. So now if price is going down, that would be a good thing. So every time you've touched this line, you tend to go down. So I'm betting we'll see something like that once again. Because, I mean, that's what happened last time, and we already know that the Fed is about to hike. Yeah, and you're sitting at, so it's reversed in this case. So down here would mean it's overbought. But see what I'm saying? If you invert the scale, that'll help with your bull or bear bias. Like, say you take a look at, let's just take a common one, General Motors. Okay. Say you have this piece of data right here. Let's say you entered the market over here because you're like, oh my god, I haven't seen GM this low in years. Gotta get myself some General Motors stock because I don't know. Let's just say you entered over here. I don't know why, but we'll take a look on the weekly. If you had entered there, you experienced a nice pump, but now you're making a lower low after that first pump. And this one kind of looks like the banks. Looks like you're entering a descending channel or a bit of a wedge. And you're just probably going to oscillate in between here until a larger market move comes. So, you know, let's say I mean, I don't know why you would buy GM. My chart's not even big. Let's look at, okay, BMW. So BMW, you know, you're just BMW since 88 up 1,700%, which is really good. All right, I'm kind of done. 25 minutes. Oh my God, this is way too long.